Celsius, I posted this. I mean, just incredible how much the stock has really fallen at this point in time, right? Now, in regards to today's fall, another leg lower in regards to the stock. From what I'm hearing, it sounds like they were at an investor conference here today. I have not listened to this yet. I'm sure I will tonight. But they're at some sort of investor conference, and essentially they had some sort of comments about Pepsi bringing down inventory levels, right? Now, some people believe this is like confusion. Here's the deal, okay? And this is what retail investors got to know. Listen. If we're talking about a situation where Pepsi's bringing down inventory levels, then that means there's a decent probability Celsius is going to miss their next quarter numbers, maybe even the following quarter numbers. If there's a chance they're going to miss this quarter or next quarter's numbers, then there's a pretty high probability they're missing this year's yearly numbers when it comes to revenue. If they miss this year's yearly revenues when it comes to numbers when it comes to revenue, that means they're likely going to miss earnings per share as well. Now, if they miss both those metrics, there's likely probability that they're going to miss on their margins as well. So we could look at a trifecta of misses coming for Celsius over the next 1 to 2 quarters. Does that make anybody feel great? No. If you're a shorter term trader, you don't want no piece of Celsius right now, given that analysts are probably going to have to bring down all their numbers, right? If we go ahead and we look at 1000x and kind of, obviously we're looking at what analysts are expecting here. These revenue numbers, these earnings per share numbers, maybe even these, I mean, at the end of the day, these EPS numbers and revenue numbers, analysts are going to have to likely bring those down. They're going to have to bring them down. And what does that mean? I can tell you that doesn't mean good things for the stock in the short term, right? If you have analysts after analysts coming out saying, we thought they were going to grow at this number, they're not even going to grow remotely close to that. It's bad. Now, also seeing in Nielsen data recently, they have been losing some market share to Bang Energy. Let me show you guys something I posted inside my private stock group's Discord chat this weekend, because I actually think it's rather important to show you this. So this is pretty mind-blowing here, because what we're hearing is, if you don't know, Monster owns Bang nowadays, okay? From what we're hearing, the Bang numbers were all very, very good in regards to the latest numbers. The Monster numbers for the Monster brand itself, not that good, but Bang numbers were pretty good. And I believe Reign's doing pretty good in the market. But I posted this inside the private stock group. So look, somebody posted this Celsius can here, right? And they talk about they were drinking that and whatnot, right? But look at this. This is freaky, okay? Is that not a Celsius right there? It looks like a freaking Celsius. Monster is basically, through their Reign product, Reign is owned by Monster, they're kind of like copying the vibe. I mean, like really copying the look and the vibe. Are they not? I was like, whoa. And these are little tricks in games that are played out there by these different companies, right? You see, one of your coworkers is drinking some product that looks like this. They're talking about how good it is, gives them energy, and then you go to the store and you're like, oh, there's that product. I'm going to grab one. Like these are little games that are played, and these games are actually won and lost by these little changes like this, by like designing, making your can very, very similar. I'm like, it's genius by Monster, by the way. Genius. You know the hot product in the market the last several years has been Celsius. We all know that, right? Why not try to make some of your products look exactly like their products, right? So I don't know, man. That's just like one of those things I look at and I'm like, dang, that's kind of genius as far as that goes, right? So now, in regards to Celsius overall, obviously we know the product's moving. We know it sells well. There's no debating that. There's no question about that, right? The biggest question is the numbers. In these numbers and these projections likely being off. Now, if we go to the valuation calculator here on 1000xstocks.com, right? So let's go ahead, let's run some modest projections here. Let's say Celsius is really in a bad spot in the next few years. Really bad spot for Celsius would be 10% revenue growth a year and 15% earnings per share growth. These numbers would be trash for Celsius if they actually only did these numbers. They should do a lot more than these numbers, just to be quite frank. These are insanely bearish numbers and projections here. And let's say you're going to value this company between a 20 PE and a 30 PE, right? Okay. So once again, this is like really, really bearish scenario here. I just want to run these numbers. So in this sort of scenario, we could be looking at a stock price in 2028 of $38 to $57-ish, somewhere in there. So obviously the CAGR would be not very good on the low end there. But keep in mind, 10% revenue growth and 15% net income growth for Celsius would just be awful, pure awful for this company. They should do way better than that. Now, the problem is I don't think they're going to likely do the numbers analysts are expecting here. I think people got to get more realistic about Celsius's growth rates, and I think they got to project more toward 15 to 20% growth on average a year, which I think is a realistic number for Celsius. I think they could realistically grow 15% to 20% over the coming years, and I think they could grow their earnings per share by about 25% per year, 2025 through 2028. There's no doubt in my mind, like as a company scales and gets bigger, the profitability should go up and up and up. Net income margins could approach like a 20% plus number, right? And so in this scenario, now you're talking about a real attractive risk reward here. 53 on the low end, 79 on the high end, 12% compound annual growth rate on the low side, 24% on the high side, right? That's very attractive. And I think those are more realistic numbers. The numbers I ran, obviously, at the start were very doomsday. But let's step it up even a little bit more, okay? So let's say they were able to do 25% on average. I have a lot of doubts about this now, just to be quite frank. There's so much confusion going on with the company. I don't know if they can really get 25%. But I want to go kind of a bullish scenario. And let's say they do 30% EPS growth on average a year over the coming years. Now we're talking about a $62 stock to about a $92 stock, which would be a compound annual growth rate on the low side of 17% and a compound annual growth rate on the high side of 29%, which is very attractive, clearly, right? So, but, am I having reservations about starting a position in Celsius here at $32? I got to be honest with you guys, I am. I really am. And the reason being is I don't know really what numbers this company is. There's so much confusion going on. I would say it's like a 90% probability they're probably going to miss on revenue this upcoming quarter. The question is, how bad do they miss, right? I believe analyst numbers are going to have to come down big time on this one. And so even I'm looking at the company and I'm kind of like, what do they grow in 2025? Is it a 10% type number? Is it like a 20%? Is it a 30%? I believe the 40-50% numbers are kind of thrown out the window now, in my personal opinion. I think that's going to be near impossible to do for this company. So it's just kind of like, where are we at here? It's very confusing. And so even I'm having some reservations about kind of starting a position here. Now, somebody said, $15 for the stock. They kind of, I think it was on my X post that somebody was talking about, they think the stock's going to go to $15. I think 15's hard. As I told you guys before in regards to stock, I can see it going into the 20s. But I can't really see it going lower than like a 22 number, just to be quite frank. It's even with all the concerns about growth rates, all the concerns about next year numbers, analysts potentially bringing down projections, I have a lot of trouble seeing the stock go under 20 and go down to like $15. All things are possible. It is a stock market, but I don't think it's super realistic, just to be quite frank. I think 22 would be the absolute worst case scenario for this stock overall. But I don't know. I'm going to give it some more thought. I might start a position here. We'll see. Now, if we go ahead and take a peek at Monster, because I've also thought about, well, if I buy Celsius, why not buy Monster as well? Can I do a dually trade here? So as far as Monster goes, obviously they should not have nearly as strong a growth going in future years as somebody like a Celsius. So if we run them at like a 7% growth rate on average on the top line and about 11% on the bottom line for this one, and we still hold up a 20 to 30p, which is pretty fair for somebody like a Monster, we get a much lower risk reward. But you also got to look at Monster a little bit differently than a Celsius. Monster's much more well diversified. They own Monster, they own Reign, they own Bang Energy, right? And additionally, they own a couple other smaller energy drink brands. So Monster is just more well diversified. They're much bigger internationally than Celsius, so they're a much more well diversified built company than somebody like a Celsius. So you kind of go into a stock like this and you don't expect necessarily the same sort of compounded annual growth rate that you would with a Celsius, but you're also not likely taking the level of risk in regards to a Monster that you would a Celsius, right? Like if something really bad happened to Celsius's brand, then we could be talking about a situation where, they're in really bad stuff, right? So I don't know. We'll see where it all shakes out, but I'm definitely leaning closer to starting a position. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We've got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. The first stock I bought here in the public count here today is Celsius Holdings. Yes, no more flirting. I've been flirting with this stock for a little bit now, right? And we just did our first kiss. Oh, did we indeed. 32.49 is what I got these shares at here today, 150 shares. This is a starting position for me. This is not the whole thing. This is a starting position. And I expect to buy the stock on and off for probably, my guess is the next 6 months. Now, in regards to Celsius, obviously, brutal drop here today, 11+%. The stock's down. It's been cut in half in the past year, right? And everybody needs to understand this is the risk of buying into companies that have very high growth and a very high valuation. This is a perfect example, and it's a retail trader stock. You want to buy into a stock that has, insane growth, insane valuation. Just be prepared to get cut in half. It doesn't mean you will get cut in half, but there's a decent probability you could if those growth rates at all turn, which is obviously what's happened here with Celsius. And man, does the stock start getting hit hard, right? This looks at Celsius's PE over the last few years, right? 392, 456. Keep in mind the stock market in general trades at a PE somewhere in the 20s usually, right? Or even under 20s in tough times. 761, 1,200, 393, 260. So Celsius was always a very high PE stock. And it reminds me a little bit of Elf, right? Elf is another great example of a stock that, look at the past year. Elf's flatlined in a year. And this is all while the numbers have been great. So this is another perfect example of kind of the risk you take if you're going to buy into these stocks that have insane growth, but also insane valuation, right? Look at Elf. They beat every single quarter. And yet, what does the stock have to show for it in the past year? Nothing. Literally nothing. Despite them destroying numbers quarter in and quarter out, right? Now, me personally, I'm a happy camper. I have no complaints. So what? The stock hasn't done anything the past year. I'm up 1,700%, right? I've been in the stock for years and years and years, so there's no complaints from me. But I can tell you, if you're an investor who's bought in the past year to Elf, you probably have some complaints because you're like, man, this stock's so hard to make money and they're reporting all these good numbers. What the heck's going on? Very similar phenomenon with like a Celsius, right? This is a 5-year chart of Celsius. If you've been holding Celsius for 5 years, my gosh, you've outperformed NVIDIA. The almighty NVIDIA, the stock that everybody thinks about as the greatest stock in the stock market the past 5 years, you outperformed them. That's incredible, right? 2,500% gain in the past 5 years for Celsius. NVIDIA's at 2,200% gain. Now, is it the 7,000+% gain you were sitting on a few months ago? No. But 2,500% even after an epic crash is still pretty dang impressive. The S&P 500 is up a paltry 85% in the past 5 years, right? S&P 500. So, but when your holders are very upset in regards to Celsius here, right? And I saw some people on X today, we're about to go through my projections for Celsius here and where I think the stock price is going and whatnot. I saw people on X today upset. Man, were they upset about Celsius stock. They're calling for the CEO's head. They want him fired. Saw several people, and I saw a ton of people liking those comments. Yeah, let's fire the CEO. Let's fire the CEO. Yeah. What? What are we talking about here? This company went from no one ever heard of Celsius 5 years ago to today, the stock's gone up 2,500%. And you want to fire the CEO from building this company from like a nobody, nothing company to what it is today, where it's you basically can walk into any convenience store, any grocery store, Target, Walmart, Costco, right? And there's Celsius product on the shelves. You want to fire him because the stock crashed? What? I mean, do you know how many other stocks crash all the time? Nvidia stock has crashed many times. Maybe they should have fired Jensen back in the day when it crashed the millionth time. Maybe they should have fired the co-CEOs of Monster back in the day, because Monster is a stock that crashed many times, right? Like, what are we talking about here? Maybe they should have fired Zuckerberg from Meta back when the stock fell 70%. What? Come on, man. Wake up. That's very short-term mindset, and that just shows me that there's a lot of people that are holding Celsius stock right now that are very immature. They're very inexperienced in the market, and there's a lot of them, okay? The fact that I saw several people commenting, they want the CEO gone, and I saw a ton of people liking those comments, it shows me that there's a lot of immature holders in regards to stock. And so I'm of the understanding that this baby could go lower short term. And that's why you don't see me going all in today. You can tell me that. It's a starting position. We kissed today. And we'll see if we get to the marriage point over time here. But seeing how many immature people hold this stock is scary. It's really scary. And that definitely, there's going to be a lot of weak hands here. Maybe the stock moves up a little bit. And then those folks are easy to run out of the stock because they're just trying to get whatever they can get. I'm just telling you, there's a lot of people that hold. There's some really intelligent people, I think, that hold this stock, and there's some really clueless people that hold this stock. So just be prepared for that because it became such a popular stock. I mean, anytime your stock price goes up thousands of percent over a few year span, you're going to attract a lot of, unfortunately, dumb money. You're going to have a lot of smart money in that stock, but you're also going to attract a lot of dumb money. And it happens to every stock that goes up thousands of percent. And I can tell you, there's a lot of dumb money that's holding Celsius that were buying the stock at $80, $90 a share, and now they're looking at it at $30 here today. And they're like, what happened? What happened, right? It's the same old story as always. They buy at the tops, they sell at the lows, and don't be surprised if we see that in regards to Celsius. Now, let's get into some projections, kind of what I'm thinking about in regards to Celsius. I'm going to give you my ultra bearish case, my bear case, my base case, which is what I'm basically expecting for the company, my bull case, and my ultra bullish case for Celsius. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. So, this one, if you're scared, close your eyes for this one, okay? If you're scared, close your eyes, because this is a rough one, okay? My ultra bear case has Celsius growing revenues only 8% on average a year from 2025 to 2028, okay? For a 4-year span, 8% on average, which would be disastrous. Absolutely disastrous for Celsius. I mean, this is a company that's obviously been growing like triple digits. And so for them to go down to 8% on average year after year after year, that means their business model got broken, okay? Straight up. And then their net income also only going up 8%, so they don't even get any leverage as their revenue's going up. So this is just a disaster all around, right? They'd put it at 15% net margins. A company like this should get to 20% plus net margins, so 15% is really bad. I put them at a P ratio of in the 20 and 30 range here. So if this ultra bear scenario does play out, it's going to be a waste of money, essentially, Celsius stock. It would put me at the low end of a compounded annual growth rate of -2%, and on the high end, the CAGR would be about 8%, right? Compounded annual growth rate. So, yeah, if this scenario plays out, every dollar I put into Celsius was a wasted dollar, okay? My bear case in regards to Celsius, this one, also pretty sad numbers here. This one, I have them only doing this on 1000xstocks.com, by the way, which once again, if you want access to that, apply for that. That's pinned comment down there. For this one, I have revenue growth of 12% on average a year, 2025 to 2028. In net income growth of only 12%. Again, they don't get any leverage. In regards to those revenues going up, they don't get any push up in regards to that net income, which would be very bad. So 12% here. Once again, P ratio in kind of the 20 to 30 range. That would put me at a low end, a CAGR of 1%, compounded annual growth rate of 1%. And on the high end, that would put it at a CAGR of about 12%. So, this one isn't horrible, but it's still pretty dang rough. And I would still look at this as kind of like wasted money in the end because of so many other opportunities out there that could be better. So if either of these scenarios play out, no bueno. But what's my base case? My base case is what I'm actually expecting for this company. And then we'll go into my bull case, my super bull case. This is what I'm expecting for Celsius. I believe Celsius is going to be able to grow their revenues 15% clip on average per year, 2025 to 2028. I believe Celsius is going to get quite a bit of leverage in regards to their bottom line over the next 4 years, essentially. And I believe 2025 to 2028, they'll be able to grow that net income 25% on average a year, which will put them at a net income margin of around 21%, which is decent for the drink category. It's not the most amazing number you've ever seen, but it's a decent, respectable number, which is, I'll be thinking about Celsius as more a mature company then, right? Getting up to about $3 billion of revenue. So I expect them to be somewhere around there. Now, if they're growing 15%, 25%, you could easily command a 25 to 35 PE ratio. You could probably command higher than that, but I'd rather be a little conservative. So in this scenario, I would get a CAGR on the low end, a compounded annual growth rate of about 19%. On the high end here, I'd get about 30% compounded annual growth rate. That's my base case. That's what I expect to happen here. That's why I started a position in the stock here today, because I believe there's quite a bit of money to be made here over the next few years in regards to my base case. But we have some even better scenarios. What about my bull case in regards to the stock? So this is the one I'm expecting, but if things are quite a bit better than I'm expecting, here's what I'm expecting, okay? I'm expecting 20% revenue growth in a bullish scenario on average per year, 2025 to 2028, and around 28% net income growth. Now, in this scenario, I actually have their net income margin actually being a little bit on the lower end for this particular bull case I wanted to run here. I wanted to say, what if even under my bull case, the net income margin was under 20%, right? Now, in the scenario, 25 to 35 PEs, easy cake. If you're growing revenue, if you're a drink company, growing revenue on average 20% a year with net income growth of 28% a year on average, 25 to 35 Ps, like stealing money. Like that's really low valuation. But even in my bull case, I sometimes like to be a little conservative. So this would put it at a CAGR of 22% on the low end and a compounded annual growth rate on the high end of about 33% here, which is, once again, pretty darn appetizing. What about my ultra bullish case? Woo! Keep in mind, even my ultra bullish case, I bet you this is low projections and numbers compared to a lot of people. So just always keep that in mind. I'd rather be all my cases a little lower than like a lot of people out there, right? So my ultra bullish case for Celsius, this is like as good as I could see it possibly going for the next few years. I would have them grow in revenue at 25% clip a year, right, for those years, and I'd have them grow net income at about a 32% clip, which once again would put them at net income margins under 20%, which is, not great for the drink industry, especially if you're talking about a more mature company that's doing $4 billion of revenue at that time. P ratio, in the bag of a 30 to 40, you're probably going to command a 50 or 60, just to be honest, but I wanted to run 30 or 40 Ps here, and in this sort of scenario, that would put the compounded annual growth rate at about 32% on the low end and about 42% on the high end, which is very, very good, okay? So this is why I started a position at Celsius, right? Now, there's some bad stuff going on here, okay? Some good and some bad. We got to talk about some of the more recent stuff because that's what everybody's really tied up into in regards to stock is really, they're not really thinking about the projections I just took you through. They're not really thinking about 2025 through 2028. They're really thinking about 2024, okay? So here's the deal. This is from the latest Nielsen data, right? In the energy drink category, Bang outpaced Celsius in the latest Nielsen update. On scanner data, Bang nowadays is owned by Monster, just so you're aware. Okay, MNST. On scanner data at retail outlets in the United States, for the 4-week period that ended August 24th, Bang saw sales up 13.4% year over year. So Bang sales are very good. Monster's certainly getting that brand turned around, right? That brand was a super hot brand many years ago. Then it went through some really tough times. Monster acquired the company, and then, it seems like Monster's bringing them back to life. Now, Celsius grew 5.9%. So people would be really freaked out about Celsius if the numbers were negative, right? If Celsius was going down in regards to sales. Sales for Celsius are going up and up and up and up. Were they beat out by Bang? Sure. But Bang's a turnaround brand, right? But at the end of the day, Celsius destroyed Red Bull and decimated Monster, right? If you look at Red Bull was up 2.5%, Celsius up 5.9%. They over double upped the gain here. So I would look at this and I'd say this is actually very bullish for Celsius. Additionally, Monster has some problem with their core brand right now, but Monster is very well diversified. We might speak about that later on in this video. Hint. And so at the end of the day, if Monster brand might be doing a little weak, they might have other brands that are doing very well.